And it's 1:30 p.m. right here in Lagos, Nigeria. Coming up, latest World Bank economic update predicts Kenya's GDP will expand 5% this financial year. Boeing and Air Tanzania celebrating the delivery of the airline's first 767-300 freighter. As Zimbabwean dollars falls further to 3,555 Zimbabwean dollars to $1. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening with markets right here on the African continent. We see some positive sentiment right here. Right, the NGX marginally up 0.04%. Following yesterday's bigger move at intraday, we see South Africa 77,032 for the All-Share Index. That's down 0.29%. And in North Africa, the EGX 30, that's down 0.72% at intraday. And Kenya continuing that positive trend, closing again up yesterday 0.40%. Let's look at what's happening in the Middle East now. In the UAE, it's both positive, marginally up there, 0.01%. Abu Dhabi, Dubai index 0.03% up. Also within the region, Saudi Arabia also in the green, 0.48% up, and the Qatari index that's up 0.40%. So we see it's all green across board there in the Middle East. Let's head on to Europe now. Let's see what's happening in Europe. See China as the world's largest auto market, but foreign car makers are finding it hard to make progress right there in the China market. Germany's Volkswagen is now restructuring its business there in China. Lars Holter joins me now from Deutsche Welle in Berlin. Great to have you. So what's Volkswagen's plan?
Well, thanks for having me. There were rumors in Chinese media that Volkswagen could shut their plant near Shanghai, and that would have been really big news, but it's not true. Volkswagen is merely reorganizing a few items, and they're relocating their production of combustion engine cars out of that main plant. One should know that that factory in Anting is VW's main plant in China, and it's run in cooperation with Chinese joint venture partner SAIC. Now, it's unclear where the production of combustion engine cars will go to, but that's not really the point. Much more that Volkswagen will focus a lot more on electric mobility.
Tell me, Lars, what's behind the new strategy?
Pure desperation. Here's a little background on Volkswagen and its China business. VW has been the strongest car brand in China since the 1980s, but it has recently become a lot weaker. During the first quarter of this year, Volkswagen actually fell behind Chinese car maker BYD. And looking at the order books, it's hard to see how things are going to improve. Production at VW's plant is way down. The plant in Anting has a capacity for 2.3 million cars per year, and it's making only 1.3 million. And for the last couple of months, actually, production was declining. And that's mostly because Volkswagen is still betting on combustion engine cars, even though in China, plug-in hybrids and fully electric vehicles are by far the fastest growing segment. Competitor BYD is selling only electric vehicles, and those are the ones that Chinese customers want. Now, why doesn't Volkswagen get it? Sure, in Germany, as well as other European markets or the US, for example, electric vehicles are a smaller segment of the market. But looking at traffic in Shanghai, electric cars make up around half of all vehicles, and their share is growing. So it's high time Volkswagen change focus here, and moving combustion engine cars out of the main plant, it seems, is part of that strategy.
All right. What does all of this mean for investors and for the entire German car business?
Well, investors have long seen German automakers as leading in the world and as safe bets. But times have changed, not only for Volkswagen, by the way. See, it's easy to criticize them for missing the boat in China, but they're actually doing a lot better than other German brands. BMW, Mercedes, and Audi might have seen some gains in their China sales over the past year, but their total sale numbers are just really low, with anywhere between 100 to 200,000 cars sold by each of those three, and that's cuts per year. So for those companies, it seems their future revenue and profit will depend a lot on whether or not they can finally fully embrace new mobility ideas. And that's not just electric vehicles, by the way. For China specifically, cars are often fully equipped entertainment centers. Chinese car makers have put karaoke systems in cars, and they're building cafes and social media communities around their brand. Now, whether that seems ridiculous or not, it's what customers want. And if you see China as the world's biggest car market, it might be time to adjust to that.
Well, I guess the customers want what the customers want. Thank you so much, Lars Holter, right there in Berlin for the update. All right, let's head on to the UK now to see what's happening there. The aviation industry there is also getting a hit right now. Joining me is Teniola Oyetoye from London there. Great to have you, Tenny. So we see security guards at London's Heathrow Airport to strike for 31 days from the 24th of June. Tell us about this.
Yes, Ladi, 31 strike days. And I mean, it's at a very, very busy time period for travel in the UK and the world. And, you know, Heathrow is one of the UK's busiest airports. So long queues are expected, delays, cancellations. There's a lot happening during these dates. We have the Eid festival at the end of June. Also in July at the beginning, the strikes come at the beginning of the school holidays. And then the August bank holiday. So it's coming at a time where people are traveling. And although airport security staff at Heathrow have gone on strike before earlier this year, the latest round of industrial action is expected to be felt even more because Terminal 3 workers are getting involved in it for the first time, meaning about 2,000 workers will be taking part this time compared to the about 1,400 workers that took part earlier this year. You know, this is a major escalation to this long-running dispute over pay, but talks are expected to continue in the meantime. So we could see some resolution before those strike dates.
Yeah, we'll definitely be tracking that. But how are the markets looking in the UK at intraday?
Well, a slump in early trading for house builders has kept movement on the FTSE All-Share Index subdued, with the index trading up around 0.09% as intraday. The FTSE 100 is also trading up at 0.11%. The domestic market, the FTSE 250, is down, though, by 0.17%. In the currencies market, the British pound is trading up against the US dollar by 0.24. It's also trading up against the euro by 0.06, as well as the Japanese yen by 0.10. Ladi.
All right, I guess the pound looking quite strong today. Thank you so much, Tenny, for the update. Thank you. All right, let's see what's happening in the U.S. now. We see stock futures flat today after the S&P 500 notched its highest closing level of 2023. Futures tied to the Dow Jones Industrial Average that dipped about 15 points there, 0.05% down. Marginal decrease. We see the S&P 500, that's also down, up about 0.04% at 4,291 points. And the tech-heavy NASDAQ, really marginal gain there, 0.01%. But let's get yesterday's summary from our correspondent, Maria Bird.
It was slightly up on Tuesday, as the Dow Jones was up by 0.03%, the heavy tech NASDAQ was up by 0.36%, and the S&P 500 was up by 0.24%. These advances are mostly due to economically sensitive sectors. It is also clear that investors are watching to see what will happen in next week's meeting with the Federal Reserve policy, along with the fact that it is expected that we will see a month-over-month cooling of inflation for the month of May. Even though we're going to see somewhat of a hike in some of the stable market economies. But the U.S. economy is holding strong, and many investors are hopeful that next week the Federal Reserve will decide to hold on to interest rates instead of having any interest rate hikes.
All right, let's head on to the global commodities market. Now, we see oil prices steadied today after the previous session's losses. Brent crude futures, that was up by 14 cents to $76.43 a barrel. US WTI crude, that rose 16 cents, about 0.2% to $71.90 a barrel. For the metals market, we see gold prices there inching up, and we're going to take a look at what's going to happen with price action going forward. We see gold dip there about $1,977 per ounce. Let's talk to Wachira Kariuka now, Head of Training and Research, Windsor Brokers, right there in Kenya. Great to have you on the show.
Thank you, Mr. Ladi. It's always a pleasure. Thank you for giving me the opportunity on the platform.
Fantastic.
Very excited to be here.
Fantastic. So let's start with the oil market now. I remember the Saudi energy minister did say shorters in the oil market will be ouching soon. Are they ouching yet?
Not really. It's an interesting coincidence we're having this conversation on Wednesday. The major announcement on Monday, that was the OPEC, the community, the oil-producing economic community, agreed that they would start reducing the amount of supply in the oil market. And for sure, the market reacted immediately by dipping from $72. The oil per barrel cost dropped to $65. But as of now, we are exactly where the market was when the announcement was made, $72 a barrel. So we are waiting to see whether the bullish trend will continue and whether the sentiment of whether the price are going to start increasing is going to be impact and translate into real market information. So we are curious and excited to see how it goes, but we suspect the bull run will have started and it might go till the end of the week.
Oh, definitely be watching out for that. But how do you see the volatility in the oil market impacting countries like Nigeria, Angola, discontinuing fuel subsidy? Where do you see oil prices in the short term also?
Yeah, it's an interesting confluence, Ladi, that we have had economic data and geopolitical conversations merge and synchronize. The Saudi Arabia community, when they say that they want to cut supply into the market, they say they're going to start cutting $1 million a barrel production at the end of July. At the same point in time, the president of Nigeria, Mr. Tinubu, said earlier, he did not see this coming, that they would stop the subsidies that they have been giving the government. Remember, the Nigeria government spends $10 billion a year on subsidizing the fuel, all right, to be able to control living costs and the economic cost and basically just make life living a bit easier. To cut that, which he clarified would be done at the end of June, so it's therefore coinciding with when the production in the oil market is dropping, which means the costs of oil per barrel is about to increase. Then you're here having a president saying that we're not going to subsidize. It's a very unfortunate coincidence. It's truly, as they say, a series of unfortunate events. And we think that the government will think its position, especially the moment we cross $8 per barrel. I suspect the government with Libya, like you said, Nigeria, of course, and a few other oil-producing countries, they're keenly going to observe. And I know there's a pain threshold that they cannot pass, right? And I suspect it's anywhere between $80 to $85 a barrel. They'll have to start reducing and bring back the subsidies to protect the average citizen from the cost of living, which is completely going to skyrocket. Oil is a direct impact on the living cost of the average citizen. So it's an unfortunate circumstance, and I suspect they will hold on for a while and see how long it stabilizes before they change the economic policy regarding subsidies, sir.
Yeah, I guess it's like choosing between the devil and the deep blue sea here. You want subsidy, but at the same time, you can't afford it. But let's look at the metals market. Now, see gold, that's trading about $1,960 per ounce. What's driving sentiment in the gold market?
Good point. On Monday, there was a major announcement called the non-manufacturing PMI. It's just basically a way of assessing the production outside of manufacturing, right? And it dropped quite heavily. The figures came out quite negative, which meant dollar it's a U.S. market information released on Monday, and it came out very negative. So the dollar dropped, and as you can imagine, the moment the dollar dropped, then automatically the bullion or gold, which is normally a reserve, started to increase in value. So there's a fundamental drive, economically speaking, because of what is happening in the dollar market. So we think it's going to start rising, but it must stabilize. It's not a very consistent bull run. By today and tomorrow, it's probably going to start trading horizontally and having a ranging market. As of now, we are at $1,978.95 an ounce, and we have not gone higher or lower for the past 1.5 days. So that news has already been calculated in the market, and we don't think it's going to keep on ranging, going higher. It's going to stabilize. Remember, the biggest influence to the price of gold, Ladi, sir, is that there's a lot of speculation. So big investment banks and commercial banks that take very large positions are withholding their money instead of trading and taking large positions as a way to see what the Fed announcement later in the month is going to be like. Therefore, we expect a very ranging market without clear sharp swings up or down.
Right, so much volatility in all these markets. I guess it's not easy being a trader at this market right now. Thank you so much. Thank you, Wachira Karuki, Head Trading and Research, Windsor Brokers. Thank you. Always great having you.
Fantastic. Thank you, sir. Always a pleasure. So.
All right, still ahead, we'll see how subsidy removal is impacting net zero plans. That's our next conversation. Just stay with us. Welcome back. Now to our next conversation. According to the World Bank, Nigeria and 5 other countries are prime candidates for the implementation of carbon taxes. The State and Trends of Carbon Pricing report for May 2023, the World Bank highlighted Nigeria and 5 other African countries as suitable for the adoption of carbon taxes. Currently, South Africa is the sole country on the continent that has implemented carbon tax policies. For more now, join me is David Arinze, renewable energy expert. Joining me from Abuja. Great to have you on the show.
Warm greetings, Ladi. Glad to be here.
Fantastic. So first, let's talk about, subsidy removal now. That's been an anthem since President Tinubu's inauguration. Nigeria launched its energy transition plan in August 2022 to demonstrate its commitment to achieving carbon neutrality. But how does subsidy removal impact this plan?
Thank you so much for the question. When you look at the energy transition plan and look at the critical sectors that the energy transition plan seeks to address, talking about industries, cooking, oil and gas, power and transportation, you see that the subsidy removal, we need to look at it from its short-term impact and its long-term impact. And what are those long-term impacts that we've identified? We're looking at the fact that resources that have been used to subsidize, that have been used for subsidy, can now go into critical infrastructure in other sectors. The energy transition plan itself has to be financed, and it is investments that are revenue that can be saved from subsidy that can be used, in financing critical plans that have a long-term impact, on several sectors. We're looking at the possibilities of having a stronger currency, but also looking at the fact that we could significantly reduce our borrowing as a country. So I would say that the subsidy removal is one decision, hard decision that has had to be taken, which has already been taken, but we need to also begin to look at it from the long-term impact. And of course, when you look at the energy transition plan and all it has to offer, it's rather would have a lot of overarching impact, positive impact in the Nigerian economy. So that's what I see from this standpoint. And
do you see it moving lower income people to either dirtier alternatives or cleaner alternatives, with the subsidy removal? Because we've seen PMS prices is sky high right now.
Very true. And this also gives Nigeria a very good opportunity to showcase some of its solutions that are able to meet those critical needs that could take people back to fossil fuels, such as their cooking needs, their heating needs, and all those sort of their energy generation needs or electricity needs. So at the end, there are already solutions on ground. Private sector is playing critically in the energy sector, in the renewable energy space, to provide solutions that really solve, that provide a solution to some of these problems that I had earlier identified. But it's critical that a lot more awareness needs to go into them. Government needs to be able to showcase these solutions as alternatives to fossil fuels. These clean energy solutions need to be shown to the public. A lot more support needs to be given to the private sector to scale these solutions and increase the investment within the sector to get everyone. People need to meet their cooking needs, but they can meet their cooking needs with clean stoves. People need to meet their transportation needs, but there are cleaner approaches, that could be leveraged. We've seen the news around having gas-powered buses and the rest of them. These sort of initiatives are solutions that are viable, but we need to scale them, because at the end of the day, if people need to meet their needs, people need to survive. So if they are not getting the opportunity to access these cleaner solutions, then they would begin to go to solutions that would not be in our favor when we look at climate change in the long term. So there are solutions on ground. The private sector is already playing very hard in this. Much more support needs to be done. And with that, I don't see people going to use fossil fuels. Rather, we can continue to leverage and encourage renewable energy solutions from this point.
Okay, but how about carbon taxes now? How does it work? And we see South Africa is the only African country with the policy right now. How's that working out for them?
Honestly, when you look at carbon taxes, what are carbon taxes? Carbon taxes are literally a fee given to that emitters must pay, for polluting the environment, And so South Africa, that has positioned itself as a manufacturing hub, in its own right in Africa, is one where the government is saying, okay, if you're manufacturing or if you are producing carbon, they have different thresholds that they have identified. And so if you fall into any of those thresholds, there is already a fee per ton, that you pay as an emitter. So interestingly, Nigeria can leverage on this as well to increase revenue. And this is also in South Africa, has been managed by the tax office, the South African revenue service, right? And so Nigeria can easily plug into this and also leverage the resources that could come up from this, but also beyond just leveraging the resources, but also begin to encourage things like green manufacturing. There are already a couple of initiatives on the scene that are providing some level of incentives to those who are conscious about the way they manufacture, conscious about not trying to pollute the environment through their manufacturing, conscious about sustainable consumption, sustainable production, and even sustainable financing or green financing. So these are certain things that the Nigerian government can leverage, by one, will I call it punishing those who are emitting, but secondly, there are initiatives that can compensate those who are also ensuring that their carbon savings that are being achieved.
Yeah, I guess.
So there are two opportunities there.
All right.
Absolutely.
All right, thank you so much. We'll keep tracking to see how the carbon taxes actually work here in Nigeria. Thank you, David Arinze, renewable energy expert. Always great having you.
Absolutely. Thank you so much for having me.
All right, let's look at some stories now. We see Kenya's economic growth momentum is expected to return to pre-COVID levels on easing cost of living pressures driven by recovery in agriculture. Latest World Bank economic update projects the country's GDP to expand to 5% this financial year and grow by 10 basis points in 2024 and 2025. In addition, the government's ongoing fertilizer subsidy program is anticipated to continue containing the cost of production. Inflation is expected to decline to 5.7% in 2024-25, leading to a loose monetary policy in the medium term. Though the bank is confident about the country's growth, downside risks remain substantial, and Kenya's growth could be lower in the medium term in the event they materialize. And Boeing and Air Tanzania celebrating the delivery of airline's first 767-300 freighter. The airplane arrived at the airline's hub in Dar es Salaam and will provide the operator dedicated air freight capacity to serve the country's growing cargo market. Deliveries also marks the first direct 767 freighter delivery from Boeing to an African carrier. The 767-300 freighter's excellent fuel efficiency, operational flexibility, and low noise levels will enable Air Tanzania to support time-critical cargo shuttles across Africa and beyond. This is Air Tanzania's first dedicated freighter as the country looks to expand import and export of perishable goods. And the Consumer Council of Zimbabwe says a family of 6 now require $1 million Zimbabwean dollars a month to survive, up from 611,275 Zimbabwean dollars in April, reflecting the depth of the Zim dollar's crash and resultant price spikes. Zimbabwe is now caught up in a vortex of rapidly weakening currency, rising inflation, price spikes that have left workers facing impoverishment as wages and earnings fail to keep pace. Yesterday, the Zimbabwean dollar further crashed to 3,555 Zimbabwean dollars to 2,577 against the US dollar, where the highest bid was around 4,100 Zimbabwean dollars. That's it on Business Incorporated today. Thank you for watching. I'm Ladi Williams. Catch you again tomorrow. Bye-bye.